Well, the biggest opportunities for private equity and for venture capital can be found in China. Or so says Morgan Stanley Asia's former chairman, John Wadsworth. He is now the chairman and founder of Chengwei Ventures, which is one of China's earliest independent investment firms. And he comes to us live this morning from San Francisco, California. Good morning to you, John. Thank you so much for joining us. Where are you
Good
finding...
morning, Maggie. Thank you.
I think you're the first person to call me that, but I'll let you get away with it today because we're excited to have you on the show.
Okay.
Where are you finding the best opportunities right now in China?
Well, I think you have to first approach China from the point of view that it is closed in many ways to foreign investment. The renminbi yuan, the currency, is still a blocked currency. It's not tradable in the market, and capital account transactions, therefore, must be approved by the government. The currency is, of course, free to trade on current account, but not on capital account. That means that there are limited opportunities for investing. Foreign investors are basically excluded from the internal trading markets for equities and debt, and therefore you must approach it either through Hong Kong or through the private equity market or through a vehicle called qualified foreign investment vehicles. And one of the largest opportunities for participating in China today is through the private equity market. There are tens of billions of dollars that are being invested in private companies in China with the prospect of either going public locally or internationally or being sold.
So how do you go through this process, and do you still really have to partner in many ways with domestically domiciled firms?
No, I think that is a misconstrued notion historically. Today, you can invest directly in Chinese companies that are private. You don't need to have partners. There are really no restrictions on foreign ownership. So once you're able to invest in China through one of these private equity vehicles, it's pretty much an open market.
And where are you most focused? There's been a lot of buzz about the potential of healthcare in China because there aren't the same sort of social safety net infrastructures that you see in places like the U.S. Are you finding opportunities in that space?
Well, I think there's definitely investment opportunity in the healthcare field. It can be in terms of providing care, in terms of pharmaceuticals, in terms of devices. That's just one opportunity in China. Probably the largest opportunity in China is just in basic industry through private equity, investing in manufacturing companies. And from our point of view, venture capital in the traditional Silicon Valley sense, that is starting new companies. And in addition to healthcare, I would add the internet, wireless, software, clean tech. It reads pretty much like the kind of opportunity that people talk about even today in Silicon Valley.
Now, much had been made about some of the other Asian economies competing for a portion of the manufacturing pie, Vietnam in particular. Do you think that flight for a cheaper manufacturing base has stopped within the past year?
Oh, no. I think China certainly has been a victim of the global economic slowdown. But the competitiveness of Chinese labor and manufacturing is still an extraordinary opportunity for China. Certainly, there will be eventually competition from countries like Vietnam. But today, I think China is still a major beneficiary from the competitive advantage that they enjoy through low labor costs.
Now, how different is the experience? Because you've also taken quite a look at the Japanese market. How different is it doing business? I mean, is this very much a model that is unique when it comes to putting capital to work in China?
Well, that's a very good question. I think two things quite different between Japan and China. One, in the boom days in Japan, there was a very difficult regulatory and cultural environment that affected direct investment in Japan. So there were very few major investments made in industries like autos or semiconductors. On the other hand, China has been wide open to industrial investment, and there has been significant capital inflows. In fact, I would say even with the block currency, $50 to $60 billion a year have been flowing into investment in China. Likewise, in the private equity field, there are growth equity investment opportunities in China, as well as venture capital. And this really relates to the entrepreneurial nature of the Chinese population.
All right. Well, thank you so much, John Wadsworth. You know that well, one of the first financiers to do business there. Thank you so much.